Hello everybody, welcome to the TraderMerlin show for your Tuesday afternoon edition. Yes, it's going to be a good one today. We got all kinds of forex talk today. And before we get into that, quick shout out to everybody. I won't read everybody's names, but hello to the group. Got to see I got a regular following here from chilly Chicago for John. Yeah, it's kind of an ugly, weird, overcast day here in California as well, at least Southern California. But, you know, we'll be back to our 70 degrees in no time, just to rub that in a little bit. All right, I'm going to go and real quickly show you the December challenge. Of course, we got myself, Tom, Les, Tony, Michael, and Peter all inputting their things for the challenge. So I hope that you all are going to achieve your goals, not only for today, but for the remainder of December. Granted, there might be a day or two off there, but if you want to be added to this list and kind of hold yourself accountable to doing something, read a book, learn a language, you know, go out to the surf every day or go skiing every day for the next month, do it. Let me know. Email me at TraderMerlin@gmail.com, and I'll put you on that list, and we'll give you shouts out every day. So today's show is, again, as most shows are, driven by listener content, listener feedback, and people just saying, hey, could you cover this, or this isn't very clear to me, and I've got a little bit of a backlog on topics, but I thought this one was probably fairly appropriate since I don't talk about it too much. Not that I'm avoiding it, there's just so much in the financial markets to talk about. Granted, tomorrow we're going to talk about bonds, and who knows, we might even talk about macroeconomics on Thursday's show. We got, you know, options last week, you've got equities. It's just, there's tons of stuff to talk about. So today's question, and again, thank you, David, for the comment. I don't know, for some reason I thought this might have been David Warner trying to just basically hint me to get him back on the show. Maybe it is. David, next time just tell me you want to come on the show. You're always welcome. He says, please talk about FX on your show today. Now, for those that don't know, FX is not the TV channel. It's not special effects. It's forex, global currency markets, which is, of course, what we're going to talk about today. A bit of an update, and we'll run through a whole bunch of different markets here. We'll look at things from the technical, sprinkle on a little bit of fundamentals. But I think we'll start things off by just setting the stage and talking about the big picture. Now, obviously, this week is pretty important. There are some major announcements going on with regards to macro markets. And again, I try to, at the end of every show, just kind of go through a quick list of, hey, here's what's happening for tomorrow's trading session. And I'll certainly do that today and let you know what's going on. We also have multiple rate announcements this week. This week is actually a pretty significant one because you have the Fed coming out, central banks coming out for two different countries, which I'll talk about here. This week, actually one came out last night. We have another one coming out tomorrow. And then next week is really the big week with the Fed, and we'll talk about that more. So a lot of big announcements coming up here, which could seriously impact these financial markets. Now, let's talk about the first one, which to me is the dog that wags the tail. Not to sound cocky, but the dollar is the reserve currency of the world. So we'll look at the dollar index to start things off. And this is actually a pretty overviewed chart in this program. I think we've talked about this one quite a bit, where if we look at this, the trend is your friend to the bend at the end, right? And this dollar index right now is just getting stronger and stronger and looking very good from a bullish perspective. Now, we did max out about 2 weeks ago, had that little peak that got close to 97. Maybe I'll just put a line right across the top so we can just have that one there. And it looks to be right about, oh, that's close enough. Right around, call it 97, right? Just about 97, a hair shy of 97. Had a little bit of a pullback, which is not that big of a deal. The question is, where do we pull back to? And depending on who draws on these charts, who's doing the technical analysis and looking at supply and demand, there's really three spots that somebody would have lined up. It's going to be this one right here. So I'll put three little yellow boxes and then delete them just to give you an idea. And this is why, beauty is in the eye of the beholder. There's one there. There's one right there. And then we have another one that is way down. And this is subjective as well. That's how I draw them. Some people would actually draw it like this. But all of those reflecting points at which that dollar may pull back to and give us a potential buying opportunity. At this point, there's no real logic behind shorting the dollar or selling the dollar and going into something else, just because this trend has been so strong since, let's call it, mid-May. So we've got a great trend going on the dollar index. So for David, who sent in the question, said, hey, can you please talk about FX on your show? I think you have to start with that fundamental view of, I'm already going to establish a bias. And I know we talk about biases here, especially after yesterday's show, right? Don't hold a bias. Well, if you look at the main currency, which is the dollar, and its trajectory is pretty clear. It's in an established uptrend. It doesn't feel like it has any weaknesses right now. That can all change. Then generally we want to go with any dollar-denominated long pair, right? We want to make sure we look for the dollar that's the pairs with the dollar that are moving up. Now, I will say this just as a disclosure, I really don't trade cross pairs. And when I trade Forex, I'm usually trading the futures products, which are going to be against the dollar. And that's going to be things like the Australian dollar, the Canadian dollar, the Swiss franc US dollar, the euro, the British pound, and Japanese yen. Those are pretty much the currencies I trade. It's not that there's no opportunity in the other ones. It's just I feel that I trade better when looking at that big picture, seeing where the dollar is going, and saying, all right, I will base the probability of my trade off the current trend of the US dollar. Done. That's just simple the way I do it. I know some of you Forex guys out there going, well, I want to look at the pound yen cross. Cool. That's one of David Warner's favorite ones. Awesome. It's just not for me. It doesn't make it bad at all. It's just, find things that work for you and stick to those. So for me, the dollar pairs work. So let's, on that vein, let's dive a little bit deeper into what we're going into, I guess, with the Forex market. So first one, let's start to look at the Australian dollar. The Australian dollar is very interesting, right? So we've talked about this. We've been looking at that sustained weakness for over a month now, and it's really just actually a beautiful slide to the south. I mean, you see it at one point was up about 77.55, fell all the way down to 70. So that's a pretty good drop in price. Nothing nuclear, but definitely a pretty sharp decline. Now, as far as where that turning point was going to come, we did have this area of demand. Granted, it's not fresh, right? That's the little yellow box over here on the left-hand side of my screen, which goes back into October of 2020. And we just came right down to it now, almost to the dead low of it, actually. If we put my horizontal line, you notice that lines up on both of those. The dead low from 2 days ago is also the dead low from back in October. Let me see. I think it might actually be November. Yep, November 2nd. So all in all, not a bad time to be looking to buy the Australian dollar if you're looking to catch that falling knife. Now, I'll tell you, and I think you guys know this by now, just because something is selling off aggressively doesn't mean it's a buy, right? Unless this thing's falling into an area of demand, I'm not really that interested in buying it. I need something to help turn price. And when we looked at this price chart, that area of demand is not that great, right? Again, it's been hit multiple times. Let me zoom in here a little bit. All right, so there's that zone. It really started in September, went all the way to November, was looking weaker and weaker, actually was forming a descending triangle. So I can just add on more layers of indicators and terms. But you have this descending triangle going on right here. If you asked me right here where I thought this thing was going, I'd say it's going down. I say if this thing breaks down below these lows of, let's call it 69.75, start shorting that thing, right? Looking weak. Just because it had this big uptrend, it started to show some lower highs, maintaining the lows, but compressing down. Now, for anybody that's watching this right now, it's important that you pay attention to this pattern right here, because as we look at some other spot Forexes, pairs, you'll see a similar pattern going on with some other asset class today. So pretty good for me and for all of us, I think. So we have the similar picture. Nice strong uptrend here in the Aussie dollar. That goes all the way back into March of 2020. Higher highs, higher lows. At this point here, everything's fine. Then we get on September 25th, kind of our first big sign of weakness as it started to make some new lows. Then it made the same lows, but lower highs. So the pressure was pushing to the south side. This is a great pattern because I would be more inclined to think this thing's going to break down. But again, it's all about rules. So 69.50, I think was our number. It didn't break it, and all of a sudden, we broke out of that descending triangle and off to the races. Now, again, we'll see this a little bit later on when we look at some of the other markets. But just wanted to show you a historical example of a descending triangle not working and actually breaking and going with the direction of the bigger trend. So all in all, it's looking okay from a short-term bounce here. Now, if you're long on that Australian dollar, you got to ask yourself, well, where's it going to go, right? There's not any really strong supply zones here. There are some, but none of them just scream at you and just go, wow, there's so much selling going on at a specific price level. I just don't see it other than going all the way back up to 75.50. Now, the other part of this is there is a major announcement that came out last night with regards to the Australian dollar, right? And that was they kept their rates the same. Now, of course, I'm always looking at these rate announcements because they can create major moves. Now, that's probably part of the reason why you saw that spike happen today. And it's actually in the new rollover session, but let me see if I can get a number here. Yeah, a 1% move yesterday, and the day before that we moved up 0.8%. For a spot pair, that's pretty significant, right? And I believe that most of this was on the heels of that announcement, just kind of maybe a little bit of relief. They're keeping rates really low, which could further stimulate the economy, whereas the talk track has been that rates are going to be raised in Australia, just like they were in New Zealand. So kind of a spike up in their pair just because they did not raise rates. So all in all, not too bad for the Aussie dollar. I personally still think it's headed down. We might get a bounce up here, but all in all, it feels like this is just more of a downturn thing. Yeah, lockdowns for Aussies, and Margaret, might not just be for Aussies, right? We might be getting locked. I know Europe was doing some lockdowns. I think maybe maybe we get some lockdowns here in the States. Who knows? But this Omicron virus has got people freaked out a little bit. I think the thing that I'm learning more and more, or actually I kind of knew this early on, is guys, COVID's not going to go away. It's not like it will be polio where we can take a vaccine and it cures it and we are no longer an issue. Because if that was the case, we would have a 100% working vaccine for the common flu, which we still don't have. And maybe it's because the common flu doesn't kill as many people as COVID, so now there's all these business products to make you better from the flu, so let's not fix it. Who knows? Maybe I'm just being a bitter cynic out here, but I don't think it's going away. It'll just be the next variant, and hopefully at some point we'll start to build up tolerances. But it would be nice to get back to no masks and going to full concerts again. I would love to go to the beach, Lori. If the weather was nice, I would definitely love to go to the beach, but just not today. Okay, let me go back to the charts here. We'll start with the Aussie. All in all, it looks good from just a short-term, maybe day to swing trade on it, but I just don't see it reversing this big trend here and rocking permanently the upside. It just seems like this is slowly making lower highs and lower lows, all starting back on February 26th of 2021. Lower lows, lower highs. All right, let's move down the list. CAD. Here's another good one. Now, the CAD, as you guys may know, tomorrow at 7 a.m., they have their rate announcement. No worry, Lori. Is it my little marker, my marker on my eye? Remember, I have vitiligo, so it always looks like I have a sunburnt face. So the CAD tomorrow coming out at 7 a.m. with a rate announcement. They're expected to stay the same at 25 basis points. I think what's noteworthy here is we've looked at that Dixie, right? We looked at the dollar index, which has been making higher lows. And of course, the Canadian dollar is in the dollar index. It's not the biggest element. But you can see that Canada is actually rather strong. Here's your dollar index, which is predominantly the euro against the US dollar, but it has, the Japanese yen, the pound, the Swedish kroner, and a couple others. When we look at that USD CAD, the dollar definitely looks strong, but nowhere near as strong as it did against some of the other ones. So again, you look at the move that happened over the last 2 days. What was that a response to? Well, you guys know I love patterns like shooting stars, and look how gorgeous. I mean, if you remember all the rules, I think a lot of you remember the rules that I talked about. You have this shooting star that goes back to August 20th. That is a gorgeous shooting star. Gigantic topping tail, small real body. Next day it actually opened down, but it rallied back above that line and then cratered. Awesome shooting star. So now you have these couple of test points where the USD CAD has run into overhead supply for whatever reason and come crashing back down. So let's put that line right around here as kind of the starting point for it. Where you put that top part, that's very subjective. It could be way up here. It could be even higher. I'm going to go shorter just to confine my my ranges. I like mine to be very tight. So, was this a foregone conclusion that the CAD was going to tank right there? No, not really. But we look at probability, and hey, it hasn't made it above this line of 128.50. Well, that might be a decent point to short and great opportunity now. The question becomes, where is this thing going? If this, in fact, is in a new uptrend here where we're starting to make higher highs and higher lows, does it get down to the 125 mark, which would be right here where my cursor's at? That's certainly a possibility, right? I think the dollar is probably due for a little bit of a pullback here before starting its next leg up. And, of course, a lot of it will, I think, depend on what the Fed and central bankers say on the 15th, which is going to be next week. So overall, bullish on USD CAD. Right now is a pullback, potential buy. We're kind of at a demand zone. I think we're actually gone through it. You see a demand zone here that goes from the 25th to 26th of November. Going back to our post-Thanksgiving rally up. I think buying right now at 126.50 is probably a little aggressive. I would go for a deeper pullback here before buying anything on the USD. Now, Swiss franc, I really don't even watch Swiss franc, but I think the picture remains the same here. You've got this nice trending up market with the USD Swiss franc, where I can connect all these lows and notice that perfectly hits. So this is definitely the definition of an uptrend line. Is you have to have a starting point and then 2 points for confirmation, and we have that here. So all in all, bullish on it, not aggressively bullish. It looks like it's just slowly chugging to the upside, slowly moving up. So fine for those who want to go long USD CHF. Now here's the real fun one. You guys might remember, I think it was 2 weeks ago, we did a Monday morning must-knows. And basically I was looking at that dollar index breaking out. And said if the dollar index breaks out above these levels, keep your eye on the euro and the pound. There are some levels where if we get below it, we could see some quick downside moves. And man, what a gorgeous call that was. Here is the Euro Swiss franc, and this blue line is the 115.26 mark, which is what we talked about in the Monday morning must-knows. And you can see the reason why, right? We had this lower highs, lower lows, lower highs, lower lows. It based for a second. It said if it got below this, you could have a quick downside move. Not only do we have a downside move, but it fell right and aggressively down to that next level, just below 112. Right now we're the low point there of that area would be, I call it 111.90. So for those of you who follow David Warner's style about using whole numbers psychology and kind of the dimes theory, which I'm a fan of, this was a perfect point. Now I guess the question for everybody here is this the bottom? Is this that point where you say, okay, the euro's finally going to start to bounce here? It came into an area of demand. This is going to reverse this whole trend, and now we'll see the euro up at 120, 125, or 130 or something like that. Personally, I don't think so. I think at this point the dollar is still the lead horse. So as that one continues to move up, we should see continued weakness in the euro. I think you make the same type of trade here. So when we had it up above 115.28, right? So if it gets down below 115.26, there's your short opportunity. I think you're running into the same situation right now, which is you have this kind of aggressive sell-off, a quick fall into an area of demand. It will probably retest this 119 level, right? I agree it looks dangerous, but I'm not taking it long, that's for sure. But if it does get down below this 111.90, oh, I keep saying 119, but 111.90, if it gets below that, notice over here on the left-hand side of the chart, I don't really have anything until right down here at 109. So that'd be a pretty nice fall from grace and a pretty nice opportunity, of course, especially with given the leverage in the forex markets. But that's kind of how I'm mapping out this one here, and I may actually go short on this. I'll let you guys know when I do. If we get below the 111.90 mark on the euro, again, I'm a big fan of the trend is your friend, and at this point, that trend looks weak for whatever reason. And again, we could look at the fundamentals, right? The fundamentals in Europe are actually starting to slow down. Does anybody here look at the fundamentals of Europe? Does anybody care? I know we've got some Europeans here, so I'm sure you're like, oh, I care. Look, you're out there looking to make a trade on the euro. It might benefit us. Part of the reason we're seeing this weakness today, we came out with the ZEW Economic Sentiment Report, which is a very popular report in Europe. But there's the German ZEW Economic Sentiment Report, which is arguably more important. Since Germany is kind of the fulcrum of the European Union, most people look to their report. And they actually showed a decline in their ZEW Economic Sentiment Report, which basically said people feeling less optimistic about their markets. So, that's just another layer of information that's pushing on that European market to the downside. And it's been consistently dropping, by the way. You go back a few months, and their ZEW announcement was like it's 70 or 75, meaning everybody's going, yes, bull market, this is great, we feel really confident. Well, once you go below zero, that means that people are actually pessimistic on your market. So there still is optimism, but the previous month-over-month reading on the ZEW, let's see if I can show it to you here so you guys can, since I'm just reading numbers off. Bear with me as I try to bring this bigger for you. All right, there it is. So here is the I think this is the German ZEW. Yeah, notice back here, you can go just back into June of this year, and all of a sudden we went from 75 down to, we're at 29 now in the most recent reading. So it was higher than expectations, but it was a decline over the previous month, which is not good. And you can see that we had the 1 month COVID dip on German ZEW economic sentiment report, and then all of a sudden it just rips to the upside. Kind of interesting how theirs was so aggressive from a bullish perspective. Yeah, I guess I could find, let me just real quick see if I can go out here and pull up the US. We'll go filter, we'll do none, we'll bring up US dollar, and I want to go into just sentiment, consumer surveys. Yeah, let's see if this does it. Here's a preliminary University of Michigan consumer sentiment numbers. We're still rather high. Here's ours. So we were really doing great, up over 100 back in February of 2020, and then came crashing back down. We're still above zero, but I think this might be reported differently. I know that the ZEW, it oscillates above and below zero. Let me see what this one is. It's nice, guys. If you go to Forex Factory, a lot of times they will give you a little description of it here. So this one doesn't go above and below zero. I would use 50 as the number, so it's going to go between 0 and 100. So, looking at this here, it's still optimistic for the U.S., but again, this is University of Michigan. It's a pretty limited study, but anyway, just one indication here. Does Germany still have the strongest economy in Europe? I do believe so. I believe they are still the lead dog. Okay, so the ZEW Economic Center report, that one came out today, which was, let me go back to our remove all studies and go back to what we had here. And let's see, that's Monday. Here's Tuesday, and there's your ZEW. So they wanted it, the previous number was 31.7. They came out at 29.9, which isn't like a total collapse, but they're expecting it to actually go down, not up. They wanted to drop to 25.3, so it wasn't as bad as expectations. And here's what it was for the overall European Union. Okay, they were expecting it to come out at 22.4. They came out at 26.8, which actually showed an increase in sentiment overall in Europe, but Germany sliding just a little bit. So that's kind of the main pieces for the euro out there. I still am bearish on it. I think that once we break 111.90, there'll be another opportunity here from the short perspective. Now, what else am I missing? I'm missing the British pound, which is also in a very similar situation, although we're not seeing that bounce in that British pound. Here is the GBP USD, which of course is the inverse of the dollar, right? It's got the GBP first, which means that this is the price of the pound quoted in US dollars. So it's just been dropping less and less, meaning the pound buys you fewer and fewer US dollars, so they're losing buying power. And if you look at this price chart, downtrend, lower highs, lower lows. And again, I would be looking myself out here saying, where do I think that there's a good demand zone on this British pound where it might start to bounce at? And I'll be honest, I just don't see any. We could make the call that this level right around here at 129.25 could be one. Yeah, Eric, Forex Factory is really good. A lot of good information there, especially charts if you're looking for, historical economic data. Very good resource. I'm not as confident on the British pound with regards to demand zones as I am on the euro. I think the euro has much clearer ones. There's just been so much chop and weird price action going back here. I just don't, I'll zoom in on here just for a sec so you guys can see. But, below this blue line, does anybody see a demand zone that you'd go, wow, that looks awesome? Not really. You've got a weak one right here because it's already been hit. I guess the best one you have on here is all the way back down here, which is going to put us down at approximately 127.38. That's currently, that's a long way away from where we are right now. So unfortunately, it doesn't allow much, I guess, short-term targets to be established, but that's what I got. Don't discount University of Michigan. Yes, good game. I don't discount Michigan. I just think it's interesting that this university is doing all these economic data reports, and usually one of the more popular ones. It's faded a little bit, but it still is an industry standard with regards to consumer sentiment. The UOM, University of Michigan Consumer Sentiment. The economics department runs that one. So yeah, again, if anything, since I don't have any strong demand zones to potentially pick a bottom, At this point, I think it's a question of short the rally. So if you get the pound back up to 135, which given the current trend, I don't think it'll hit it anytime soon. You get to 135, you have some nice opportunity, I feel, for more continued downside movement here in the British pound. All right, so what have we gone through? We've gone through the Aussie, the CAD, the Swiss franc, the euro, the pound, and now the Japanese yen. This is probably the worst chart, and the only reason I say worst is it doesn't have very clear, to me, nice, stable trends. It has a lot of weird, choppy, aggressive impulse moves. So if we look at this one here, we do have some demand zones that we could play off of. But if I'm looking at this from a trend perspective, is it in an uptrend? If I show you this, we say yes, it's in an uptrend, right? You get higher highs, higher lows. Right now, I think we're on kind of the potential turning point for this. So for me with the USD JPY, you kind of draw a line across those bottoms at, let's say, 112.50. If we can get below that, then my bullishness on the yen starts to wane. Now the question is, do you go short right away? It's one of those things where you go, oh, if that happens, I'm going short. I don't know. Do you wait for confirmation? You wait for it to get down to 111.42 or lower before you start going short? Probably safer to do so, right? To me, it's safer to wait for confirmation and let things kind of prove that they are doing what you think they're going to do, but they don't always do that, right? They don't always do what you think they're going to do. So personally, I would rather wait on the USD JPY. I still think, again, overall, that we're going to be seeing this dollar trend higher and higher and higher. I'll go this out to this is the Dixie, by the way. Oh, I turned the watermark off. I'm sorry, everybody. I turned it off because I was taking some graphics. Where's my watermark? There. You guys wanted the watermark. Sorry, should have had that on the whole time. My bad. You guys got to let me know these things. So if we go out to the weekly on the Dixie, just to kind of look at the bigger long-term perspective, we are bouncing our head right across this, call it 97 mark. Where do we go from there? Well, there is, if you look at the top here, right around 97.80. That's kind of the peak of the next supply. Then all of a sudden, you got a long run. You're looking at the 100 mark, which would be the next logical target. Now, of course, I could whittle this down a little bit more, go into the daily, and just kind of scroll back here and say between this break above 97.80 and 100, is there anything else? Well, there is. It's actually this level right here, which is right at 100. So this is really more the 100 mark. So to me, that's your status. It's about the dollar in the driver's seat. It's about looking at these other currencies for potential, in my case, would be shorting opportunities, because I'm looking at the dollar as continuing to move up. Therefore, that means shorting these other currencies. So depending on how the pair is quoted, definitely think that there's some. You can live in my watermarks. Thanks, Eric. Well, I think other people were asking for them just because it makes it easy to see what I'm talking about, which is cool, fine with me. I just take them off when I do screen captures and things like that. All right, so that's pretty much it with regards to the majors. If there's any cross pairs you guys want me to check out, I'm happy to perform some analysis on it. Most of the fundamental stuff I'm looking for, guys, I don't really look too much at. I don't look at the same data I do here in the U.S. Obviously, I've got more of a vested interest in what are the unemployment numbers, the GDP, all that type of stuff. CPI number coming out Friday, that's huge. So I don't know. I don't really follow that much anymore. I'd rather follow it for the dollar, which is the lead dog. And if that tells me that the dollar is going to be getting weaker, then I'll look for buying opportunities in some of the other ones at strong demand zones. If it tells me the dollar is getting stronger, then I'm going to look for shorting opportunities in these other currencies against the dollar at supply zones. That's just kind of the simple math for me. So if there's anything else, just go ahead and type it in there. Can you make watermark even lighter so it doesn't hide candles? I don't think I can at this version. Yeah, it doesn't. I can't. It's just going to be, do I have a watermark or not? So unfortunately, no. Maybe in the paid version, but I don't pay for stuff. So let me go to one more question here, which is a pretty interesting. We actually talked about this. This is from Pano. I don't know if I pronounced it right. I think it's Pano. He says short Turkish Lira. Actually, I don't know if it's a he or she. Is it short Turkish Lira? Question mark. Well, as you guys may have seen, the Turkish Lira, which is TRY-USD, has been, USD TRY. Okay, so this is the US dollar against the Turkish Lira. and it has gone absolutely crazy. We talked about this a couple of weeks ago, I think when it was like 10 or 11, and I said, don't short this thing. To me, it's just too dangerous, right? Currencies should not move like this. You're dealing with a hyperinflation type of environment. The Turkish lira is getting weaker and weaker. And again, this chart, just so you guys understand, if you were to go to Turkey today, you could get 13.5 Turkish lira for your dollar. If you went back in August, you would have gotten 8 Turkish lira for your dollar. So you're almost at 50% more buying power, or you've almost doubled your buying power since August. Now, that's not good for Turkey, right? That's a bad sign. It's great for us as tourists, but yeah, be careful with this one. And again, you can flip it around and go TRY-USD. This basically tells you what's going on with the Turkish lira. It is imploding and looking weaker and weaker and weaker. Is this thing going to bounce? I don't think so. It's just not risky enough or it's not safe enough for me to play. This has way too much risk. I'd rather be trading Dogecoin than trade this thing. So, no, I'm not in it. I don't think you should short the Turkish lira, Pano, and I think you're looking at USD TRY. I do not think you should short this one. Could it turn into a huge winning trade? Absolutely. But again, I do believe that the risk associated with that trade to go short here when something's moving up at such a rate with leverage is just way too dangerous. But the spreads are massive on this one. You can see you got 1348.7 by 1356.2. That's huge. That's no longer 1 or 2 pips, which would be the norm. I mean, now you're talking into the 10, 20, 30, sometimes even over 100 pips, depending on the time of day for USD Turkish lira. So I personally think, Pano, stay away from it. It's interesting to watch. If anything, go travel to Turkey and get a greater bang for your buck. That's all. You can analyze USD pen for long-term. Sure, why not? Let's go USD. The Peruvian sol. Obviously, what happens when you have a chart like this is it makes me very, very wary. Like, I don't follow the Peruvian sol, so I apologize, NJ. I think I may have looked at it for you in the past, but this is definitely something that I'm not going to be trading. When you have actions like this, it makes me very nervous because what's happened is they put a ceiling in here on price. They put a floor in. It looks very manipulated, and I'm not exactly sure why that is. But let me see if I can get a different one. USD SOL. Oh, sorry, not SOL. Pen. Be ironic. Unfortunately, it's only coming from this IDC. So maybe I'm just not getting a very liquid quote, but this quote looks really strange to me. All in all, it looks like a decent uptrend right now. Right? It's for the US dollar, and again, we know the dollar's just gaining strength, so I'll go to a weekly here, maybe paint a different picture. Looks great. Again, when you have a currency that moves like this, that's almost too steep of an incline, right? That's a very sharp incline in a currency pair. So I'm a little skeptical on that, but all in all, it basically looks like we should be buying pullbacks. Your last great buy on the pullback was right here, where whatever this reason for this gap up, my guess is just bad data, right? But if we did have this gap up from I'm sorry, a lot of the podcasters can't hear or see what I'm talking about, but on the 26th of July of this year, we were at $3.925, right? And then the next morning, according to this, or sorry, the next week opens up, after they rolled it over, I guess, at 4.056. So over the weekend, you had a big gap. Okay, fine. This huge pullback came right back into the origin of the gap, right? That type of stuff I like to look at. I love gap fills and kind of the magnet that gap fills present to price and pullback. So all in all, right now, it looks decent. It feels like it's thinly traded. Doesn't seem like there's a lot of liquidity, even though the spread seems fine. When I go to the daily, a chart that looks like this to me is just fraught with problems. It looks kind of a mess. Middle East manipulating currency and yeah, we're all manipulating our currency. And whenever we want to point the finger at whomever country, remember, I think the U.S. has mastered currency manipulation. Remember, we've printed over $15 trillion in the last year. That's not currency manipulation. I think I was trying to bring up a quote that I heard the other day, which I thought was really good, and and I think I got it right. If you what do you call when you fabricate something? When you forge or counterfeit. If you were to counterfeit money, that's a criminal offense. When the Fed counterfeits money, it's not a criminal offense, and it's called inflation. So, it is definitely manipulation going on everybody's part. And again, we're all trying to improve our economy, help our populace out, whatever that. And I know we've got people from all over the world in here. It's no different in your country versus the United States. The United States just has more power for now. That may be changing. All right, what other questions you guys have for me? I think I pretty much got your questions. There actually is some more. I got one more I'm going to answer from Rick, and then I actually had a question from Patrick talking about analyzing the financial space. I'll probably do that. We'll see what happens this week, but tomorrow we're going to have... my brain is just fried. We're going to have Bill Addis on the program tomorrow talking about bonds. He actually talked about some new bond products he wanted to bring up. So we'll see how that goes tomorrow. Thursday, I may have the Ambassador of Opportunity. I've got a few messages from you people asking about John O'Donnell coming back on the show. And I said, well, John, you want to come on? So we'll see. I'm trying to get him to come on Thursday, and then maybe I'll talk about financials, etc. on Friday. So here is the last one, at least that came in, that I'll get to. I'll answer some of your questions in chat if you have them, so type them on in. This is from Rick. He says, how come you never talk about the Dow? Okay, it's actually very simple, at least in my opinion. So we can look at the Dow as a market, right? Obviously, the main four we have here that I talk about on this show, and I think are the main watch ones in the world. Number one, S&P 500. Number two, you got the NASDAQ. Number three, around the world, Dow is probably number one most widely viewed around the world. And you don't feel that here in the U.S., but if you travel more, the first thing you see on business programs is, here's what the Dow Jones Industrial Average did in America. And then the third one would be the Russell 2000. Now, here is the chart of those, and I have them all here. So here's your Dow, which, of course, has had a absolutely tremendous 4-day run of over almost 1,800 points. Oh, gotta love that. Actually, it's right into an area of supply, which to me is a potential short opportunity. So kind of interested to see how tomorrow pans out as you came into this overhead supply right at 35,800. And that's where we are exactly right now. So why don't I use it, Rick? Well, I just personally don't believe it's a good representation of a market. So if we look at the S&P 500, there's over 500 companies. I believe it's 503 make up that index. And that represents such a broad array of the economy that to me that's the broadest measure. Now, I know a lot of you are going to say, but there's the Wilshire 5000. Okay, well, that's everything. But a lot of that's garbage, right? A lot of that is just crap and junk and scam, shill, penny stocks and garbage. It shouldn't even be in an index, in my opinion. It shouldn't even be listed. However, it's there. The S&P, I think, gives you the broadest of real companies. When you, how is the box doing? Oh, you mean on IWM? It actually bounced off the bottom of it. Funny, you should say that. So S&P is 500 plus. You have the NASDAQ 100, which is actually over 100 now. And again, that's kind of more focused on technology. The Dow is 30 companies, which certainly you could pick the leader in each market segment or maybe one or two leaders, but it doesn't give me a really broad measure. Plus, if one of those companies were to have a really sharp decline, it could theoretically impact that index much more. So we hear so much about diversification of your portfolio to remove what's called diversifiable risk. Diversifiable risk is that portion of your portfolio that benefits from risk reduction by having more assets in it. And at a certain point, you can remove all diversifiable risk. And that's essentially what mutual funds and index funds are designed to do. So that's why I don't look at the Dow. It's not that there's no trading opportunities. It's not that there's nothing there. I don't know. I think that the S&P and the NASDAQ and the Russell are more important from my perspective. Again, you might think differently, and that's okay. Yellow box for life. I should just make a yellow box. Just put TraderMerlin in. That's my t-shirt. I'll make that one up. Is IBM a leader? That's kind of that's a really tricky one for me to say. Because I look at IBM and go, what are you leading in? But they're information technologies, right? They're servers and data centers and cloud products and, Watts and all that stuff. Are they a leader? I don't know if they're the leader. I think we could say that they are a leader in the industry. Sure. I think there might be better alternatives to IBM, but that's just my opinion. I don't own any IBM, so it's not in my portfolio. Is the U.S. going to do a majority of crypto in U.S.? Is the U.S. going up due to majority of crypto is in U.S.? No, I don't think USD is going to be impacted by majority in USD. Remember, a lot of people are using stable coins that are not necessarily backed to US dollars, and they're using their own fiat currency. So most people are buying Bitcoin with their fiat and then trading from there. So I think once they're in the ecosystem, they're not necessarily going back in US dollars. Granted, there are a lot of US buyers of cryptocurrency, but I don't think that necessarily is impacting the price of the dollar. Let's see, what else do I have? Jeffrey Hirsch. I'll reach out to Jeffrey. Why not? We get near the year end, see what he says about the markets. Yeah, it's tough to get him on. I'm such a small fish in the industry that a lot of these guys are going to go, I don't want to be on your show. I got other things to do. Yeah, exactly, Eric. Dow is all over the news, yet it's a small number of companies, and to me, it's not the dog that wags the tail. I'm looking for the dog that wags the tail so I can act on that. Let's see. I wanted to show. So how's the box doing? So we'll go to IWM. Did I put on a Russell or IWM? So there's your Russell. I did stretch it to incorporate this new pullback, and we came almost right down to the bottom of it again. And I made that point to everybody. I said this low level here, this low point, which is 2100 on the IW or Russell. To me, that's still intact. I think that the upside is no longer valid because we broke through whatever supply may have been there. But I do believe that you have this low level is still intact with buyers. And if we get through that, you could see a quick aggressive move to this outside. So there you go. All right. I think that will can you bring the get that one already? All right. I think I got everybody's questions. Sweet. Watermark. You can reduce the transparency on the bar. Oh man, now you're gonna make. I'll test this out, Raj, somewhere else, but I'm not gonna do it right now. I'll try to reduce that watermark a little bit more. All right, cool. Well, I'm gonna do this. I'm gonna show you guys a couple of pieces of economic announcement, and then I'll show you what's going on for tomorrow, and then we will jump and I'll wrap things up because I'm trading the yellow box sideways. Long live the yellow box. Awesome, Tom. I'm glad you are. Right? I mean, and I'll be honest. This is rare. To see something do this long is rare. This is really like a special event, especially for an index that's as widely used as the Russell 2000. That is very rare to see something that in that big of a range. You're talking almost a 300-point range and almost perfectly sideways. Incredible. Okay, so here's what's going on for tomorrow from your economic calendar perspective for the 8th of December. Really, the main stuff is going to be U.S.-based, in my opinion. That's because we have crude oil inventories. They're expecting a contraction in supply there. You guys can see dropping from -0.9 to -1.5. Of course, this one's usually all over the place. You also have crude oil inventories and, job openings. And then right before that, and this will be 30 minutes after the U.S. markets open, you have a rate statement for Canada. So for anybody who's trading that CAD, they're expected to stay right in line at 25 basis points tomorrow on that rate announcement. But as you saw earlier with the USD CAD, it has had some pretty aggressive quick moves here recently. There's your USD CAD. So that could add a lot more volatility to the Canadian dollar. That's really it from the economic perspective. I don't see anything here that's like a red flag, but let's see. What else do I have? Earnings-wise, we've got nothing extremely exciting. Thor Industries, RH, Campbell Soup, but the one that I like is GameStop. All right, you got the meme stock, the one that all these Reddit traders are probably still holding, and they are in agonizing pain. Why? Because it's GameStop, people. Oops, there's your GameStop. Right now, it's trading at $179. To me, that's about $140 overvalued. So we will have to wait and see how this one pans out, but I think this will be a fun one to watch. Leave it alone, people. Don't try to trade GameStop's earnings announcements. No, it's just not worth it. Anything can happen on this one. All right, that will do it for me. How much time we got? Oh yeah, it's 1:45. I got to run. I got to get things done. Again, if you like today's show, you always feel free to give me a thumbs up or post some comments, share it, whatever you need to do. If you have comments, want me to cover a specific topic, go over something as we've seen from a lot of viewers the last few shows have been all driven by you guys. So David, thank you for your comment about, could you please talk about Forex in your show? I think we covered it. I pretty much talked exclusively Forex. I didn't even mention the colossal moves that happened in the NASDAQ and the S&P and the Russell today, which were monumental in my opinion, 3% for the NASDAQ, good Lord. Anyway, guys, that will do it for me for today. Again, send on in your comments, questions for feedback. That said, I will see you tomorrow with Bill Addis talking bonds on our show tomorrow. Take care.